Good day, ladies and gentlemen. This video is going to focus on division of receipts and expenses between the income interest and the principal interest. This is related to the TAP complex module. Well, let's log in and pick out a trust. I've specially designed trust for you, the Abraham Lincoln Trust. And we open that up. We know that it is in the complex module. We can see that right there. So Abe has two assets, a $25,000 bank account in Washington Federal and the White House. Well, he gets to live there, so I'm giving it a dollar value. All right, so we're talking about how we're going to divide receipts and disbursements between income and principal. So this is our complex module receipts and disbursements view screen, where we would make entries related to the checking account. So we see four columns: disperse income, disperse principal, receipts of income, and receipts of principal. So right now in this video, we are going to focus on receipts of income and principal. We will discuss disbursements in another video. Now, when we look at what we have here, we have income receipts, and we have pre-entered the categories that are related to income primarily. Okay, and we have principal receipts, and we have listed out the categories that fall mainly within principal. Now, if we take a look at our slide here, we'll see that we have basically four different categories of receipts: income items, principal items, 1090 items, and hybrid items. To show that to you in a different way, if we look at four silos, basically we're going to have items that are 100% allocated to income, our 1090 items, 100% allocated to principal, and those items which are hybrid allocations. Here we see our items that are 100% allocated income. That's going to be rents, dividends, interests, ordinary receipts from a business entity, and short-term capital gains. Take a look at reinvested dividends here, where it's kind of on a hybrid situation. The dividends are income, the new shares that are purchased are principal, and there's a special way of reporting that, which is a transfer of income to principal, and we'll cover that in the income summary and principal summary in a different video. Although capital gains are traditionally characterized as principal, if the trust defines capital gains as income, then it is income. Now, returning to Abe's trust, we look at our income receipts, and you can see there are our rents. Here is capital gain income. So if you do receive capital gains and the trust designates as income, you have that category. Our dividends, very, very common, all listed in the income receipts. Okay, and in the principal receipts, you'll also see a capital gain category, which is the normal situation for capital gains. And here on this slide, we have a list of what is normally going to be a receipt that is allocated to principal. You see our capital gains again, business entities on liquidating receipts. And there's some disputes on what a liquidating receipt is and how it is reported to the recipients and what could happen here. But you can see the list here. Security deposits are a different animal. They're part of principal, but they're really not owned by the trust. They are owed by the trust, but it does increase your bank account, so it's going to go into a receipt. Now, here we have a list of examples of what we refer to as our 1090 receipts: minerals, natural resources, royalties, etc. You can read the list here. Out of the box, you're going to assume 10% to income and 90% to principal. On each of these items, we have exceptions apply, and we're just going to take one look at a sample exception. For minerals, there are similar exceptions to the other items. If you receive a nominal bonus, nominal delay rental, or nominal annual rent, allocate that portion to income. If the receipt is a production payment, the receipt is allocated to income. And then you have another exception down here on the bottom. So I know that explains everything to you, but the idea is you have to look at the statements that are given to you to determine the nature of those type of items. If you're dealing with annuity payments, there are a bunch of different rules that are involved here. Depending on what it says on the statement, if there is interest or dividend defined as a required payment, that goes to income, the balance to principal. Lots of times you're not going to have that type of information in the statement, and the default is 10% to income, 90% to principal. If it's not a required payment, then allocate 100% to principal. You could see some more information related to the marital deduction savings statute as an example. If you want to read that, you can stop the video and take a look at that. Likewise, retirement plans function similarly to an annuity. They're 1090 items where the interest and dividend is not defined as a required payment. When there is not a required payment, like a required minimum distribution, everything is going to go to principal. Once again, you have some saving statutes here for the marital deduction down at the bottom that you can take a look at. So let's make a couple of practice entries here to see how this works. This is Abe linking, so we're going to have to put in let's go with 2/5/1863. Okay, and he receives a dividend. This is in a blind trust, but he receives a dividend from Pabst Brewing Company. If you didn't know, Pabst was started in 1844, so still going today, of $1,000, so that's big money in those days. Pabst Blue Ribbon is going to be all dividends, and we're going to go ahead and save that. Likewise, Abe receives an annuity. Okay, and we're going to make about $1,000, so that's going to be 10%, or $100 by default goes to income, or 90% or $900 goes to principal. And we go to our categories and we see annuity payment income, we select that there. Annuity payment principal, we select that there and then save it. And finally, Abe receives a dividend out of his blind trust, so he doesn't really know who's paying that, from Citibank. Okay, and that dividend is going to be $2,500. In those days, capital gains certainly was always going to be a principal receipt. Citibank, if you didn't know, established in 1812 and going strong today. Selecting capital gain, and we have our capital gain. So what we have here is an example of 3 different types of entries. Here from Pabst is going to be 100% dividends. Here with the annuity is going to be 10% income, 90% principal, and then from Citibank, our capital gain of $2,500 is an example of 3 different types of entries that we've been discussing. Here we have our receipts of income and our receipts of principal. That's where we make all of these entries. Ladies and gentlemen, that will be it for allocating receipts and of income in our complex module. I do want to just remind you that all of the categories that we have looked at in our drop-down menus are straight out of the Unified Probate Code, Uniform Income and Principal Act. So thank you so much for listening.